Hi guys, I welcome you in this wonderful video. So today I'm going to be sharing with you a wonderful method that I believe is going to make trading very easy. More especially if you're using technical analysis or price action, this is going to be a very efficient method because you won't be struggling to find good entries or to find opportunities again. So let's get started. When traders usually analyze the market, they will analyze, let's say they figure out a buy. After the breakout, they buy, and then after they get what they want or after they make money, they will then leave this market and go and analyze another market, and then they'll do the same thing on the next chart. They will analyze and maybe find a selling opportunity. They execute that selling trade. If they make money, they make money, and they proceed to analyze the next one, which is something very limiting. If you are doing that, it is limiting your abilities to earn or to benefit more from the market. What should you do? Let's say you analyze here, you open this chart, and then you analyze, you figure out that's a buy. Let's say I'm just gonna do that. Let's say you figure out that there is a pattern, and then when the pattern is broken, as I said earlier, then you execute your buy. After you execute your buy here, let's say maybe you start to see the market going up and down and you begin to panic. Let's say you exit your trade and you take your profits. What you should do as a trader is that when you exit your trade, don't just exit your trade by a click of a button. Exit your trade knowing what the market was doing when we were exiting. For an example here, you can see that the market was in a corrective because it's moving up. So there's an impulsive wave, a corrective wave, and an impulsive. So when you were exiting as a trader, you should keep it in mind that I was exiting from a corrective, and you need to know and understand that a corrective, it is where you get another opportunity. So when you close here, you need to know that there is a next opportunity like this one that is coming. That is around the corner. You don't have to just close here and then go and drink some coffee or go and watch television and then analyze the next chart. When you exit here, you should know or expect, or let me just put it in simple words, you should know what the market is likely to do next. Because if you exit here, you mean that you exit in a corrective wave, the market is going to enter in an impulsive next. So the thing that you should do, or the right thing that you should do as a trader, is that you should reanalyze this market and reanalyze this structure that you are exiting on and say, okay, I can see there's the high and I can see there's the next high. Let me just connect them, and on the low side, let me see if there is something that I can connect as well. And then you connect the dots, and then when you exit your trade, at least you know that you are exiting from a certain pattern. And once you figure out the pattern, you know what you're expecting. You're expecting a breakout or a continuation. So when you exit, you will then watch the price to see what it's going to do in the future. And when this breakout comes again, you will be ready to re-enter as a buy again. Why? Because you didn't exit here and then left the chart like that. You exit with a mindset of analyzing even that pattern which forced you to exit, because you don't have to just treat these patterns as price movements and nothing else. You should treat them as price structures or as price patterns, just as you did here when you were entering your trade. So this is going to give you an advantage that when you exit here, you find the next entry again. And same thing applies as you trade here. When you see the market doing something, you try to make sense of what the market is doing. You don't just exit here and leave it like that. You exit here and try to make sense that, okay, wow, I can observe a pattern coming in, and then I know what to do. I'll wait for a breakout, and then when the breakout comes, you again execute a buy. So you can see that you now had 3 entries in the same trend, yet the beginner trader is just gonna find one entry and go to the next chart and figure out another opportunity there, meaning he hasn't developed a relationship with the chart. For you to benefit more from your analysis, you have to develop a relationship with the chart and follow up whatever that you do. Every step that you take, you should follow it up and see what the market is going to do next. Because sometimes, let's say you decide to enter, let me just make a very weird example. Let's say you decide to enter here. Let's say you decide to enter here as a buy. Let's say you just by mistake, you analyze this as a corrective on its own, and then after it's broken you decide to enter, and then the market goes down. A lot of traders will exit here, and then they will go to the next chart and try to analyze the next pair. But a mature trader, a trader who knows what he's doing, he will see that, okay, I failed here, but why did I fail, and what is likely to happen next? He will know that, okay, it might happen that I entered area, I anticipated the corrective area. Let me adjust my analysis. How does he adjust his analysis? He moves it from here, he moves it all the way up there. Now he has a new high that he has formed, and he again waits for a breakout to come, and he will be cautious the next time. Why? Because he will not just be looking only on the breakout just as he did here. He will also look at the overall structure, and here, if you can look at the overall structure, you can see that these wave was a little bit bigger, and then the next one was a little bit smaller, and the next one couldn't break the previous low. It almost at the same point, meaning this can be a genuine breakout, and then the trader will try again, and surprise, now the trade works. He is on the blue side. So this is what you should do, guys. Make sure that whenever you are analyzing the trade, don't just analyze and leave the market like that after you fail. Analyze and then reanalyze again and reanalyze again. By that way, or by using that approach, you will easily understand how the market flow, and you will even understand how an individual pair or an individual instrument behaves. You'll know that S&P 500 behave in this way, USD ZAR usually behave in this way. Why? Because you don't just analyze and pass, but you analyze and follow up with your analysis. That's the best method that I can recommend to make analyzing very, very easy. Because when you're analyzing the next wave, you are not just analyzing it from scratch, you are analyzing it from what you've developed before. That, okay, before I can see how a corrective wave was formed, and I can see how the corrective wave was big in terms of size, so I know what to expect in the future. I know how to react from that, and then once you figure out how to follow up with your analysis, is gonna be very, very easy. I show you. So I don't want to waste your time, guys. I'm just gonna leave it here. Make sure that when you analyze, you don't just analyze and leave the chart like that after you fail or after you get your profit. Make sure you analyze and come again and reanalyze, because if a market favors you and you are able to figure out the first entry, it'll be easy for you to figure out the next entry. Why? Because you already have the behavior or the structure of the market in mind. So it will be easy for you to understand, because the way the market flows, it flows relatively to its previous waves and its previous corrective. So this next corrective is going to be relative to the previous one. As you can see here, that with these corrective waves which are behaving in this kind of a descending pattern, all of them that they are behaving in that particular method. Let me leave it here before I waste my English. Thank you guys for watching.